Here are 5 things I wished someone told me when I first started trading. Hi friends, I'm Lisa, a data scientist turned algorithmic trader, and I started trading back in 2022. And like many people, I thought I could shortcut the learning curve. I won first prize in a trading competition early on. I tested tons of commercial robots, and I learned the hard way that most of them just don't work in the long term. So after losing a chunk of my profits, I decided to go all in on understanding what actually works in algorithmic trading. I've spent over $10,000 on serious education, and I've built a workflow using tools like Strategy Quant. So in this video, I'll show you what I've learned and how you can avoid the mistakes I made. Number 1, you are not stupid. This one might be a little bit of a weird one. So when I first started, I knew I didn't know anything. I'm not arrogant enough to start off thinking I know everything. So I wanted to learn from other people. I wanted to learn from people who were much smarter than me, who already knew the best way to trade, which from a mindset perspective is perfectly fine. So I jumped into YouTube and I searched how to trade with expert advisors. My intent was there. I genuinely wanted to learn how to be profitable as an algorithmic trader. The problem with YouTube is that it is controlled by the YouTube formula and the YouTube algorithm. So it can only show you what is popular, what is clickbait, and what the most amount of videos are. So if you think of the pyramid here as at the bottom, you've got beginners, which is the biggest chunk of traders. And then when people decide to stop trading, then they move into the intermediate phase. And then they lose money, and then they move into the advanced phase. So from a video perspective, most of the information out there is aimed at beginners, because if you were going to make a video, you want more people to be able to view the video. So most of the content out there is unfortunately aimed at beginners. And because beginners don't know what they don't know, the titles that most likely stand out and are clicked by the majority of beginner traders are titles like a high win rate strategy, this strategy made 9,000%, a no loss strategy, I made 50K with this one strategy. You can change the word strategy to robot or expert advisor is exactly the same concept. You think as a beginner that it's all about the strategy because the YouTube algorithm shows you the most watched, the most clickbait videos, which is all about the strategy. So if it's all about the strategy and me as a beginner, I don't have a strategy to start off with and I'm determined to work with robots, then where do I look for these strategies that are supposedly amazing? The MQL5 marketplace. Everything on the MQL marketplace looks fantastic. All their backtests look fantastic. All their track records look absolutely fantastic. Most people would be able to buy 1, 2, maybe 3 expert advisors from the MQL5 marketplace and test them out. However, because I have a YouTube channel and it was growing every day with new subscribers, people started reaching out to me and saying, hey, here's my expert advisor. Can you please test it out and make a video of it? And knowing what I knew at the time, I thought it was a fantastic opportunity for me to test out from people much smarter than me. I saw it as a way to test so many more expert advisors than what a normal person would be able to test. But after testing a handful, there was this gut feeling inside me that it didn't feel right. Something was just not right about testing all these expert advisors that were mostly grid martingale. I suspected they wouldn't work in the long run. Now, I'm not saying they're all crap. There are some genuinely good ones out there, but they are very hard to find. And the thing that worried me is that I understood that the market would change over time. And I saw that. I saw the market went from quiet to volatile, and not all expert advisors adapted well to the new volatile markets, especially when there were grid martingale. They would just blow up. So I went searching for more information, but what YouTube was giving me was all the clickbait titles about this strategy made me $10,000 in 2 weeks. I knew videos showing turning a $100 account into a $2,000 account in a matter of 2 years. I knew that was not real trading because I knew that the sellers were basically using as marketing. They were gambling their $100 account and using that as a marketing tool. But the YouTube algorithm kept on giving me just more crap. I didn't know what keywords to look for. So this is the advice to my younger self. These are the keywords if you want to really level yourself up as a trader. Stop looking for videos about the strategy, even though you're not looking for it. That's what the YouTube algorithm is giving you. These are the keywords you should be looking for. Once you've found the YouTube channels, then you can start exploring the other topics presented by them because they should be, in theory, better quality videos. I would say stay away from the channels that only talk about a particular strategy. There is actually a use for these, but I will cover that in another future video. Before we progress, I just want to say a big thanks to Black Bull Markets for sponsoring this video. So if you're looking for a solid broker, especially one that's reliable and regulated, Black Bull is definitely worth a look. So they're based in New Zealand and they are regulated by the FSA, and your funds are held in different accounts than the company funds. What I personally like is that they're designed for people who want to actively trade, and they offer an amazing 1 to 500 leverage. You get really tight raw spreads, super fast execution, and they've got MetaTrader 4, MetaTrader 5, TradingView, and CTrader. So you can choose to trade manually or use robots to do the heavy work for you. This is the market watch in my MetaTrader terminal, so you can check out the spreads as the market is currently open. They've also got different account types depending on where you're at in your trading journey. You can open a demo if you just want to test things out, or open 3 different ECN account types. You've got standard, prime, and institutional, where you can get spreads from 0 pips. You can trade Forex, commodities, equities, indices, and metals, a lot of different assets. So yeah, if you want a broker that offers 500 to 1 leverage, Black Bull is worth a look. And I've dropped a link in the description if you want to check them out or try a demo. All right, let's get back into it. Tip number 2, accounts that blow up are actually hidden. Back to the MQL5 marketplace. Everything looks amazing, doesn't it? Every single expert advisor you see has a multi-month, multi-year track record. It looks just so easy to make money because everyone seems to be doing it. But I've been watching many of these accounts for 2 years, and I notice a lot of them now no longer exist. 2 years ago, when I first started researching different expert advisors, this is what I saw. Everything was fantastic. All the equities went up. Some of them had a little bit of drawdown. Some of them had big drawdown, but majority of them looked fantastic. It was so easy. But as the months went by, as I was testing more and more commercial robots, slowly, one by one, these accounts started disappearing and they were replaced with brand new accounts. This is called survivorship bias, and this is one of the reasons why I stopped using commercial robots. Tip number 3, when watching YouTube videos, zoom out and take a look at the bigger picture. Before I dive into point 3, I want to apologize on behalf of all YouTubers how clickbait our titles are. I've been doing YouTube for 2.5 years now, and unfortunately, us YouTubers, we are at the mercy of the YouTube algorithm. We don't want to make clickbait titles, but we have to, otherwise our videos will only get like 5 or 10 views. So we have to clickbait our titles. Okay, so back to the point that I wanted to make. As a beginner, we know we don't know everything. When the YouTube algorithm presents us with a brand new video showing us concepts we've never heard about, for example, robustness testing. If you're brand new, the first time you see a video about robustness testing, you think that this person, wow, they are amazing. They mustn't be so good. They know all these fancy new concepts we've never heard of. They are so smart. This is probably very dangerous territory you've entered in right now, because now you are going to binge watch this person's brand new channel and you're going to take everything that they say at face value. But I encourage you to take a step back, to zoom out and take a look at the bigger picture. Yes, they're talking about some really complex concepts in this video, but at a big picture view, what are they actually saying? So I've broken it down into about 3 different buckets. There are a lot more, but let's keep it simple for now. First is the short-term trader. A video of a short-term trader might look something like, "Hi, I've been trading for 10 years. Check out this expert advisor that I've just tested. Here is 1 month worth of results. Doesn't it look fantastic? Buy it down below." It's great that they're showing their actual live track record or demo, whatever it is, but why is it only a month? And if you zoom out, take a look at the overall channel, you look at this video, oh, that's talking about this expert advisor showing 1 month of results here. Another video, oh, another expert advisor, totally different account, only 1 month. Zoom back 6 months, oh, they're still doing the same thing. They're still showing 1 or 2 months worth of track records for each expert advisor in every single video. Do you think that that is in reality a really good trader? Or do they have 100 accounts and they're only showing you the 1 or 2 accounts that are actually making money? The ones that are not profitable, they're just hiding it from view. The second type of video is where they're only showing historical data. For example, a video might be, "Hey, look, I've developed this strategy. It trades the RSI with the ADX indicator. Look at this fantastic backtest. This is the logic. This is why you should use it." The end. Again, zoom out, take a look at this video. Okay, that video is talking about this indicator trading the past 10 years. That video is also talking about a different set of indicators using historical data. These videos are actually really easy to make. All you do is get 1 or 2 indicators, mash them together, optimize them to show fantastic backtests, and then make a video on it. You sound super smart because it makes you sound like you've done so much research based on all the possible indicators out there. You found the perfect settings that work not only on 1, 2, 3 months of data, but potentially 20 years of data. So, wow. Tip 4 is to use multi-gurus. Now, many people will disagree with me here. They say you should follow one mentor, one guru, because if you have multiple mentors, you will find that they all have different ways of doing things and it will confuse you. Personally, I think it is more dangerous to follow one guru, one way of teaching, because they could be teaching you the wrong thing. I would rather follow a whole bunch of different traders, zoom out, take a look at the big picture, what are they saying? What are the similarities across all the different teachers? What are the differences across the different teachers? And what makes sense to you as a trader? I personally believe having a balanced approach to trading, understanding the pros and the cons of every single different trading method is much better than going all in on one particular mentor because they could be wrong. Tip number 5 is don't meddle. And I admit this is something that I struggle with myself. So with algorithmic trading, we never are able to pick the best entry, the best exit. And especially for manual traders who are used to staring at the screen and trying to pick the best entries and the best exit, with algorithmic trading, it's a totally different mindset. If you've built this strategy based on the best practices, you've got all of these stats, you've got evidence that it can be profitable over 15, 20 years, why do you think that you know better now that is actually trading in live trading conditions, that you know better, that you're going to close the trade early and you're going to be profitable in the long run? Bonus tip number 6 is think in decades. If we wanted to be a world-class athlete or musician, we know that it takes years and years of practice before you get really, really good. But for some reason, for trading, people think that they can master it in a few weeks or even a few months. Because of the information that is fed to you from the YouTube algorithm, it seems like everybody is making $1 million every single day, that it is possible to make money every single day, but it is not the case. You're going to have losing days, losing weeks, and losing years. So if we zoom out, think of it in a period of 10 years, some years will be profitable, some years will be mediocre, some years will be losing. The difference with someone learning to trade versus someone learning a musical instrument is that the person learning a musical instrument will see feedback slowly over time. So after a few months, you'll notice, oh, I can play 2 notes now. After a few months, you can play chords. You can see the progress. Whereas with trading, you actually can't see the progress. The feedback loop is much slower. And after 1-2 years of building your knowledge, you might not see profitability yet until you've hit the critical mass knowledge that is needed. That's when your profits skyrocket. Until then, it feels like you're not making any progress, whereas in reality, you are banking up all this knowledge and best practices. So if you start off already expecting it will take 10 years to master this particular skill, then you are more likely to succeed and go through the harder years. Now, these 6 tips cover the learning process I spent over the past 2 years. What I didn't cover is psychology, which is super important, regardless on if you're manual trading or algorithmic trading. If you want to learn some practical tips on how to apply psychology in algorithmic trading, then watch this video right here. Thanks.